This changes everything. Ripple just confirmed a $1 billion XRP buyback. And if you understand how rare that is, you already know. This could be the start of one of the biggest wealth shifts in crypto history. We're not talking about rumors, speculation, or some recycled headline. This is official. Ripple Labs, the company that built the backbone of the new financial internet, is literally buying back XRP from the open market. That's not just confidence. That's conviction on a billion-dollar scale. This is not financial advice. Now, if you want to stay ahead of this next financial wave, not chasing it once it's already mainstream, that's exactly where the XRP Millionaire Blueprint comes in. It's a complete high-level guide that includes a document, infographic, video, and more, all built to show you how the top 1% of crypto investors are positioning themselves right now for generational wealth opportunities. Inside, you'll learn the proven mindset, proven structure, and strategy behind turning this global financial shift into lasting freedom with clarity, confidence, and a framework you can actually use. You'll find the XRP Millionaire Blueprint linked for you in the pinned comment below this video. All right, let's break this down because what Ripple is doing right now is something we've only ever seen in traditional finance when central banks are preparing for a liquidity reset. Think about what happens when a central bank buys back its own currency or gold reserves. They're consolidating control, they're stabilizing supply, they're signaling that what they hold is about to become more valuable. Ripple is doing the same thing, but in the digital economy, and the timing of this is no coincidence. There's a global rotation happening right now, one that almost no one in mainstream media is talking about. The US has quietly been shifting its financial focus away from physical assets like gold and toward digital assets like Bitcoin. Gold has already hit all-time highs this year, trading above $2,600 per ounce, while Bitcoin has been consolidating near the $70,000 range. But behind those prices lies a massive strategic play, because when governments and institutions want to reposition capital, they don't announce it, they engineer it. You pump one market to sell high, you suppress another to buy low. That's how the game works. And right now, gold is being unloaded quietly, while sovereign funds and corporate treasuries are accumulating Bitcoin and other digital assets through over-the-counter channels. Now here's where it gets wild. If the US is positioning into Bitcoin, that sets up a perfect environment for XRP to serve as the neutral bridge asset that connects all of it. The rails between the new digital system and traditional banking infrastructure. Ripple's $1 billion buyback isn't just about price, it's about power, consolidating liquidity before the next phase of the system goes live. And while all this is happening in the shadows of monetary policy, you've got President Trump himself acknowledging Bitcoin in a completely different tone than he did years ago. This is the same man who once called Bitcoin a scam. Fast forward to today, he's saying, "A lot of people are doing it. I can live with it." That's not small talk. That's regulatory softening. That's a signal that the next administration could fully integrate digital assets into US monetary policy. Think about that. When a former president and now leading candidate publicly shifts his stance from opposition to acceptance, the floodgates of institutional money open up because regulations don't just happen out of nowhere. They're built around political momentum. Once the tone changes, the laws follow. And when the laws follow, the trillions sitting on the sidelines start moving in. Now this is all lining up perfectly with the global liquidity cycle. Central banks around the world are either cutting rates or preparing to. The Federal Reserve is expected to pivot from tightening to easing soon, meaning fresh liquidity will flow back into markets. And where does liquidity go when it returns? It flows into high upside assets, risk assets, crypto, stocks, tech. But unlike previous cycles, this one's different because now we have institutional grade infrastructure. Ripple has over 1,000 clients, including some of the largest banks and treasury platforms on earth. They're not experimenting anymore, they're executing, and they're doing it in the open. When a company like Ripple decides to allocate $1 billion to buying back its own native token. That's a statement. It's the same playbook major corporations use to increase shareholder value, except in this case, it's global digital liquidity. And here's what makes this even more powerful. Ripple's ecosystem doesn't just sit on top of XRP, it runs through it. Every corridor, every cross-border transaction, every liquidity operation, it all relies on XRP's ability to bridge value instantly. When supply tightens and demand from banks increases, what happens? The price has to adjust. And that's exactly why this move is shaking the entire crypto community. Meanwhile, the IMF and global banking elites are openly talking about blockchain interoperability. At their latest conference, executives from JP Morgan literally said they looked at distributed ledger technology over a decade ago because it could disrupt their own business model. They admitted it. That's not speculation, that's strategic pivoting. These same banks that built the old financial system are now adapting to the new one. They're moving from resistance to integration. And you know what that means? Silent capitulation. When the biggest players in the game stop fighting a technology and start adopting it, that's when you know the tide has permanently turned. Now layer that with what's happening in the public eye. Ral Pal, one of the most respected macro investors in the world, just said that Bitcoin is entering its next explosive phase. A phase he calls the banana zone. That's the point where market structure breaks, momentum takes over, and institutional capital pours in faster than retail can react. Every cycle it happens. Bitcoin moves first, then capital rotates into the rest of the crypto market, and that's where XRP historically shines. And right as this is unfolding, there are rumors flying that a Solana ETF may be on the verge of approval. Now think about how coordinated that looks. The US government can't agree on a budget, but ETF approvals are flying through. That's not chaos, that's choreography. They're normalizing crypto exposure for the mainstream. And when that door is open, guess what walks right through it next? The XRP ETF narrative. If Ripple's $1 billion buyback aligns with an ETF announcement or even just institutional grade product exposure, that's when we see the real fireworks. Because when you combine forced supply reduction with increased regulated demand, the math becomes undeniable. At the same time, liquidity is shifting back into the market. Rate cuts, easing, balance sheet expansion, it all means more cash looking for return. Risk assets pump when liquidity returns. That's how the system works. And when liquidity meets scarcity, like Ripple removing XRP from the open market, that's where parabolic moves are born. And this shift isn't just institutional, it's cultural. Mr. Beast, the most followed YouTuber on the planet with over 445 million subscribers, is launching Mr. the Beast financial trademarks for banking, crypto services, and even lending. That means nearly 500 million people are about to be introduced to digital assets through one of the most influential creators alive. That's not marketing, that's mass onboarding. And guess who's providing the infrastructure for many of these new on-ramps? Ripple. They're building the back-end plumbing that allows creators, brands, and financial institutions to connect seamlessly through blockchain rails. The world is converging into a single interoperable network, and Ripple has quietly been building it for over a decade. Meanwhile, legacy titans like Charles Schwab, who manage over 12 trillion, are openly stating that client interest in crypto is skyrocketing. Visits to their crypto investment pages are up 90% year over year. Think about that. The same wealth managers who once laughed at Bitcoin are now offering ETFs and private exposure through firms like KKR and Apollo. That's not random, that's a signal. It means crypto is no longer alternative. It's becoming part of the mainstream portfolio structure. And when that transition completes, assets like XRP, the ones tied to real-world utility, liquidity, and payments, are going to sit at the center of it all. Ripple isn't trying to be a hype token, they're becoming financial infrastructure. Their acquisition of G Treasury, a global liquidity management platform, adds another layer of enterprise integration. We're talking about hundreds of corporations managing cash flow and settlements directly through Ripple's network, and now potentially XRP itself. This is the moment we've been preparing for, but we're just getting started because the next wave of confirmation, adoption, and liquidity rotation is about to connect everything. because what we're seeing isn't just Ripple playing offense, it's the entire financial world repositioning before a complete system reset. The signs are everywhere if you know what to look for: the buyback, the Bitcoin pivot, the ETF approvals, the IMF statements, even the timing of global liquidity events. It all syncs up like clockwork. Let's start here. Ripple didn't just wake up one day and decide to allocate $1 billion toward its own asset. That kind of move is strategic. It's a play made when a company knows the environment is about to shift in its favor. They've been through the regulatory battles, they've survived the SEC lawsuit, they've built an institutional grade payments network connecting more than 70 countries. And now, when the macro tide is turning, they strike. That's not coincidence, that's precision. Behind the scenes, Ripple has been working with central banks, payment corridors, and fintechs to build the rails for real-time settlement. This isn't speculation anymore. We've seen documented pilot programs, official partnerships, and private liquidity tests. And what most people don't realize is that these tests aren't about retail use. They're about wholesale liquidity, the kind that moves trillions per day. That's where XRP shines. It's built for speed, efficiency, and scalability at a level traditional systems simply can't match. Now, zoom out. The Bank for International Settlements, the IMF, and the World Economic Forum have been pushing one phrase over and over again: interoperable financial networks. That's the future they're designing. A world where central bank digital currencies, stable coins, and tokenized assets can all coexist and transact seamlessly. But for that to happen, there has to be a bridge, a neutral settlement layer that connects every system, every asset, every currency. That's where XRP's purpose comes into play. Ripple has been building toward that vision for over a decade. They're not trying to replace the banking system, they're upgrading it. And now, with the global economy shifting toward real-time value exchange, their technology is positioned right in the middle of everything. Let's connect this to the bigger picture: the great liquidity rotation. Historically, global markets move in cycles. Money flows into bonds, then into equities, then into commodities, and now into digital assets. When interest rates fall, liquidity returns. When liquidity returns, it looks for performance. And the best performing assets are almost always those sitting at the edge of innovation. In the 2000s, it was tech stocks. In the 2010s, it was SaaS and cloud computing. Now in the 2020s, it's blockchain infrastructure. Ripple's 1 billion Telon move is a bet on that transition, a signal that utility-based assets are about to step into their era of dominance. XRP isn't a meme token. It's a settlement layer designed to move trillions of dollars in value with near zero friction. And when financial infrastructure aligns with macro liquidity, that's when true market revaluation begins. Meanwhile, the public narrative is being carefully reshaped. Think about the headlines: Bitcoin spot ETFs approved, Ethereum futures gain traction, Solana ETF rumored. These aren't isolated. There are steps in normalization. Each approval builds the foundation for the next, and at the end of that road sits utility tokens, the assets with real-world function and compliance baked in. XRP is one of the few that fits that category. Now consider timing. The Federal Reserve is projected to pivot toward easing as inflation stabilizes. When that happens, the cost of capital drops, liquidity floods back into markets, and institutions look for asymmetric opportunities. In past cycles, that meant tech. This time, it's blockchain. But not just any blockchain, the ones integrated into the financial system, the ones that central banks already trust. Ripple's long game has always been about compliance. That's why they've worked directly with regulators and financial institutions instead of against them. They've built trust where other projects built speculation. And now that trust is paying off. When banks begin settling across tokenized networks, they won't take chances on unregulated assets. They'll use the rails that already have institutional backing. That's Ripple's lane. Let's talk about what a buyback really signals in this context. In traditional finance, companies buy back shares to strengthen their balance sheets, reduce supply, and boost investor confidence. But in Ripple's case, the implications are even deeper. They're buying back the very token that fuels their ecosystem. That means every payment corridor, every liquidity pool, every institutional connection. All of it gains from a tighter, more controlled XRP float. Now imagine what happens when demand begins rising simultaneously. Global payment volume is increasing. Tokenization is accelerating. Institutional adoption is scaling. Combine that with Ripple reducing supply, and you get one of the most explosive setups in digital asset history. This is why institutional accumulation always happens quietly. They don't announce it, they disguise it. They let retail panic during downturns while they're quietly filling positions. That's what we're seeing now, a silent accumulation phase. Ripple's buyback is simply the visible tip of a much larger iceberg, and you can already see the ripple effects, no pun intended, across the industry. Major exchanges are tightening liquidity pools. OTC desks are reporting increased volume from institutional clients. Custody solutions are expanding. Even retail sentiment is shifting from speculation to strategy. People are realizing that the next wave of adoption won't come from hype. It'll come from necessity. Because the truth is, the global financial system is outdated. Swift transactions still take days. Settlement errors cost billions annually. Cross-border inefficiencies choke small and medium enterprises. Blockchain fixes all of that. And Ripple has spent a decade proving it can scale securely within regulatory frameworks. Meanwhile, at the top level, tokenization is becoming the new buzzword. BlackRock, CK, JP Morgan, and Citi are all talking about tokenized assets, tokenized bonds, and real-time settlement. But to tokenize trillions of dollars in assets, you need a neutral liquidity layer that can settle instantly and globally. XRP is purpose-built for that role. It's not an experiment, it's a working product. And when the largest asset managers on Earth begin exploring tokenized treasuries, real estate, and carbon credits, you need something that can move those assets between blockchains, between jurisdictions, between fiat systems. That's interoperability, and that's the layer Ripple built. Now let's talk about the geopolitical angle, because this is where it all connects. Countries around the world are accelerating their CBDC pilots. China has the digital yuan. Europe is exploring the digital euro. And over 130 nations are testing central bank digital currencies in some capacity. But those CBDCs can't exist in isolation. They need bridges to communicate across borders. Ripple's CBDC platform is already designed for that. It allows central banks to issue, manage, and transact with digital currencies on private ledgers while still connecting to the XRP Ledger for cross-border interoperability. That's the missing piece in global finance, the ability to settle value instantly across multiple systems. So when you combine macro liquidity returning, institutional adoption accelerating, and governments integrating blockchain into their monetary systems, the result is inevitable. A total revaluation of assets that sit at the core of this transformation. The Ripple buyback is the catalyst, not the conclusion. It's a signal to the world that they are locking in their position ahead of the next wave, because when the reset begins, it will happen fast. Money moves digitally now, and those who aren't prepared will be left behind. And look at the broader market sentiment. While retail investors are distracted by meme tokens and short-term plays, the elite players, hedge funds, sovereign wealth funds, corporate treasuries, they're focused on infrastructure. They know where the long-term value lies. They're building positions in the foundation, not the hype. That's the same thing Ripple is doing. They're not chasing trends. They're reinforcing the base layer of global payments, the same way companies like Cisco built the internet backbone before the world realized how valuable that would be. And it's not just about cross-border payments anymore. Ripple is moving into tokenized treasuries, liquidity hubs, and even carbon credit markets. Every new vertical they enter expands XRP's utility. Every corridor they open increases transactional flow. Every buyback tightens supply. This is a multi-phase strategy. And we're watching it unfold in real time. The institutional awakening is here. Governments are aligning. Corporations are integrating. And the liquidity infrastructure of the future is being built on blockchain. We are standing at the edge of a once-in-a-generation transition. From physical to digital, from siloed to interoperable, from legacy finance to programmable liquidity. And if you connect the dots, the $1 billion Ripple buyback, the softening political stance toward crypto, the ETF approvals, the central bank pilots, and the trillion-dollar liquidity rotation. It all points to one undeniable conclusion. The rails of the new financial system are being locked in right now, and now we're entering the stage where everything accelerates. The convergence of money, media, and technology into one digital system. The signs are flashing everywhere. Ripple's $1 billion buyback is just the loudest signal, but the quiet ones, the ones behind the curtain, are even more important. Payment processors, exchanges, and banks are merging liquidity channels. Fintech giants are testing tokenized remittance flows. Governments are running pilot programs that connect CBDCs to private ledgers. Every piece is moving toward interoperability. And in that environment, the asset that sits in the middle, the one that bridges every rail, becomes the ultimate source of liquidity. That's XRP's role. We're watching a new monetary order being built in real time. Bitcoin has established itself as the digital equivalent of gold, a store of value, censorship-resistant, decentralized. But every system needs a bridge asset, something that can move value instantly and efficiently between all others. XRP is engineered to fill that exact function. It doesn't compete with Bitcoin, it completes it. And this is why Ripple's move is so significant. A $1 billion buyback isn't just a financial maneuver. It's a strategic declaration. It's saying we're ready for phase 2. Because when utility adoption collides with macro liquidity, price becomes a byproduct, not the objective. Now let's talk about what happens next. We've seen this movie before, just in different forms. When Apple started buying back its shares in the 2010s, investors called it unnecessary. Years later, those same buybacks became the backbone of a trillion-dollar valuation. When Tesla started consolidating its production costs in 2018, critics called it reckless. 2 years later, it triggered one of the largest market cap expansions in history. Ripple is making a similar move quietly, strategically, and before the crowd catches on. And they're not alone. The world's largest financial institutions are quietly setting the stage for a tokenized asset era. BlackRock is leading tokenization pilots. Citi and JP Morgan are digitizing treasuries. The London Stock Exchange is preparing blockchain-based settlement systems. The CNCAA, IMF, and BIS are standardizing frameworks for cross-border digital money movement. Each of these developments adds weight to a single outcome. Blockchain-based liquidity networks become the backbone of global finance. And when those systems go live, the assets that make them work, the ones that handle settlement and interoperability, are revalued overnight. That's why this Ripple buyback is so different. It's not about hype or headlines, it's about balance sheets, liquidity, and structure. By absorbing XRP back into controlled circulation, Ripple is tightening supply while expanding global demand through new partnerships. That's not a pump. That's an engineered scarcity model, the kind that every central bank in history has relied on to increase value. At the same time, retail adoption is being driven by culture. When creators like Mr. Beast, with nearly 500 million followers, move into crypto banking, it signals the next wave of user onboarding. When social finance integrates with blockchain rails, the financial system isn't just institutional, it's personal. Every viewer becomes a participant. Every user becomes liquidity. That's why this transition is unstoppable. It's not just policy, it's participation. The youth, the creators, the corporations, and the governments are all converging into one ecosystem built on blockchain infrastructure. And for over a decade, Ripple has been quietly laying the groundwork for this shift. So, here we are. The US rotating from gold to Bitcoin, the institutions pivoting toward tokenized assets, the influencers mainstreaming crypto, and Ripple consolidating XRP like a central bank preparing for a new standard. It's all part of one synchronized global reset, a liquidity realignment from the old world to the new one. And when the next phase begins, when liquidity floods back in and regulation clears the path, the assets with real-world utility will be the ones that lead. That's XRP's lane. It's not just a crypto project. It's financial infrastructure for the digital age. Every move from here, every rate cut, every ETF approval, every CBDC integration pushes us closer to that moment when XRP's true role becomes undeniable. Ripple knows it, the banks know it, the regulators know it, and soon the rest of the world will too. So, while retail traders react to the noise, the insiders are building positions. They're locking in before the real liquidity wave begins. Because when the world's value moves digitally across borders, currencies, and assets, the bridge that connects it all becomes priceless. And that's what this moment represents: a once in a lifetime alignment of technology, liquidity, and timing all converging right now. If you understand what's happening, you know this isn't the end of a story. It's the start of a financial era that will rewrite everything we know about money. And if you want to be ready for that, I built something to help you navigate it. It's called the XRP Millionaire Blueprint, a complete guide that includes the document, infographic, and video walkthrough that break down how to identify the kind of setups that create generational wealth. You can get it right now